Welcome to the big show. It's the Retire Young radio show. If you're a first time listener, thanks for stopping by. I am your host, Joshua David, and we are happy to have you with us today. As always, I have my great friend, the mastermind, Mr. Al Connix. And Al, how the heck are you doing today?
Feeling pretty well, Josh. How about you?
I am doing fantastic. It's always a good time talking about the financial markets on this on the Retire Young radio show and just helping our Retire Young family make better investing decisions. And Al, we got a packed show once again. We had some great movements in this market again. But here's the key now. Most markets were actually flat for the actual full week. The markets were down just a little bit as far as the stock markets. Gold was pretty flat, and the US dollar was pretty flat. But today we're going to talk about opportunities no matter which way this market goes. We talk about the markets not moving much this way or this week. There was still plenty of action in shorter time frames within these financial markets. So let's talk about that today. Al, what's going on? Why did we have a flat market? What's some of the catalysts of that? And how can we participate as the average investor?
Well, the market is still kind of a push-pull, tug-of-war market between the coronavirus and the stimulus. And right now, we've got the vaccine coming. So it remains to be seen what impact that's going to have, probably a very positive one. We're still waiting for a stimulus package of some sort. So those are things that are really impacting the market. And the markets were down a little bit this week. The Dow is the only index that was up on Friday, and that was up just a small amount, and primarily because of Disney. Disney was up $21 a share, up 14%. And this last week, we had DoorDash making their IPO, Airbnb with their IPO.
That was a big one.
Those were two huge ones, and even with that, the markets were still down a little bit for the week. But you mentioned opportunities, and we always talk about opportunities in all market directions, up, down, sideways. The opportunities are there for everyone, but unfortunately only taken advantage by a few. And there was an article that I read, it was in the New York Times, that I thought really just kind of exemplified what the issue is. And what they were talking about is the kind of the widening inequality, financial inequality that has been occurring over the last decade or so. And what they said is, as people with greater education, advanced skills, and access to stock and real estate markets, they're the ones that harvested the winnings of this expansion while others struggled. The two key things there: greater education and advanced skills. Well, that just happens to be what we do. That's what we are in business for. We teach people how to address the financial markets. We give them the education, probably the finest financial education that is available for all of the different assets, all of the different market conditions. But then the advanced skills, that is what we really excel at, is helping people to develop the skills to use what they get out of the education, the knowledge that they have. So that's the important thing. But why do so many people not participate? And even some of the people that do participate don't do that well. They look at what the institutions are doing, the big players, the smart money, and they want to know why there's a difference there. Well, one of the problems is this: a lot of people just think that the market is random and unpredictable, and that's the problem. Well, that's not the problem. The problem is the individual. It's the trader and the investor. So you need to ask yourself some questions. How do you make your decisions? What are you going to invest in? When are you going to get in? When are you going to get out? How are you making your decisions? Is it just an arbitrary entry and exit? Is it just bad trading selections, or are you just ignoring the most important thing and that is timing?
And that is a few of the different keys, and we're going to unpack a lot of that here upcoming on the next couple segments. But you mentioned an interesting thing: the opportunities that are in these financial markets, they're only taken by a few people, and those few people, they take action. There's so many people out there, some may be listening that just don't know what to do. So that causes people to put their head in the sand. Well, you have to learn the skills, and then you have to execute. You have to take action and take part of that. These techniques and strategies that the institutions are utilizing, they're also available to us. So if you feel like you're missing out on all these opportunities, now is the time to take action. Now, coming up next, I want to continue the discussion on the institutions, the smart money. And we're going to talk more about supply and demand, which is how these financial markets really function. When there's more buyers and more sellers, how does the market react? Al talked about earlier that people think it's just random action or random movement in the market. It's actually strategic. So coming up next, how the markets work with supply and demand.